U.S. stocks slip after Fed commentary stokes uncertainty even as the central bank hikes rates by an expected 25 basis points. Fed Chair Jerome Powell maintains inflation remains stubborn while he signals a pause, says it is too early to cut rates. Stocks in the Asia-Pacific opened largely lower, tracking weak cues from Wall Street. The Japanese market remains shut for a holiday. The SGX Nifty suggests a mildly weak start for the Indian market. Oil slides further, dropping 4% overnight. Brent crude plunges below $72 a barrel as the Fed's most recent rate hike fuels fresh concerns over economic growth and energy demand. Titan delivers a largely in-line fourth quarter with margins slightly below street expectations. In key earnings to track, Dabur, Hero MotoCorp and HDFC are set to report their results later today. The World Bank picks former MasterCard CEO Ajay Banga as president. The Indian origin development leader will take over the reins from David Malpass starting June 2nd. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. It's a Thursday morning, so it's the weekly expiry as well. So a lot of cues for our own markets. But first up, as always, let's take a look at what the global markets are doing and specifically Asian markets. A weak handover from Wall Street, the 25 basis points rate hike, and that is something which has spooked the markets despite it being in line with what the street was working with. So we have Hang Seng, which is higher in trade today, 0.3% higher, but the Taiwanese index is lower, absolutely flat with some negative bias. So Hang Seng is the only index which is in the green right now. But look at Kospi, it's down 0.5%. Shanghai is down 0.3%. Nikkei is shut for a holiday today, so no rates from there. But largely, it's a red screen as far as the Asian screen is concerned. And SGX Nifty, as a result of all of this, is indicating that, yes, the start for Indian markets could be again in the red. Yesterday, we snapped a 6-day winning streak, and that is something that could continue today as well. A 70-point downtick is what the SGX Nifty is indicating at that 18,091 mark. But of course, the big global cue from overnight was the US Fed hiking rate by an expected 25 basis points, the 10th such increase in a row. Its post-policy commentary did indicate that there could be a pause, but no cut anytime soon. CNBC's Steve Leisman is here with all the details.
The Federal Reserve delivered an expected quarter-point hike at its May meeting, bringing the funds rate up to a new level of 5 to 5.25%, the highest level since 2007. But officials suggested that this 10th-straight hike might have been the last one. The statement said the Fed will now be determining whether additional rate hikes are needed. The prior statement said the Fed anticipated further rate hikes. Fed Chair Powell suggested a pause could be coming, but he didn't commit to one.
People did talk about pausing, but not so much at this meeting. You know, that there's a sense that we're much closer to the end of this than to the beginning. That, as I mentioned, if you add up all the tightening that's going on through various channels, we feel like we're getting close or maybe even there.
Included in that expected economic tightening are concerns that banks might tighten credit standards, reducing lending and creating a drag on economic growth. The Fed's statement said tighter credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. The statement also said inflation is elevated, so the Fed remains stuck between inflation running well above its 2% target, but slowing economic growth and a possible credit crunch. They both could bring inflation down. But the Fed doesn't know by how much, so it's hedging its bets, suggesting a possible pause, but not promising one. Steve Leisman, CNBC Business News.
Okay, Steve, thank you so much for joining us. So that's the sum and substance of what happened overnight as far as the Fed commentary is concerned. But let's also hear out what Fed Chairman Jerome Powell had to say on inflation and the trajectory of the U.S. economy as a whole.
Inflation remains too high, and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, The median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. And nearly all participants see the risks to GDP growth as weighted to the downside. Yet the labor market remains extremely tight.
And let us also listen into what former Federal Reserve Vice Chairman Alan Blinder and Jefferies chief market strategist David Zorwas make of the Fed's decision and commentary as well.
I'd say it's getting about as squishy as it ever gets right now. I mean, Jay Powell more or less said that. They're, groping for the top. They think they're right, either at the top or very close to the top. The other thing I put on your list, although it's 3 weeks off, is the minutes. I'll be looking at that to get some further information on how many members of the FOMC thought this was enough. Nobody dissented. We know that. But in the last minutes, we saw that several members thought what they had done at that point was already enough. And I don't know what was said at this one.
I don't think the market is surprised by this one bit. And he delivered what he wanted to deliver, which is, hey, we've done 500 bips. It's a lot. We're going to watch for a little while. And honestly, we're pretty happy. We've still got a 3.5% unemployment rate after those 500 bips. Inflation's coming down. Inflation expectations, 5-year, and the break-evens and the 1-year break-evens are all kind of where we want them. And we just got to take our tough medicine and slow things down and lose a few jobs and get this inflation lower, and we can be back to normal. But he's not declaring victory anytime soon, and I think his message was the same. It was we're here to be vigilant against inflation, and we're actually pretty happy with how the job market has performed through all of this tightening.
Okay, that is some commentary coming in, and following that rate hike from the Federal Reserve and commentary from Fed Chair Jerome Powell, key Wall Street indices ended lower, continuing a 3-day losing streak, with the Dow Jones sliding over 250 points, the S&P 500 down about 29 points, and the Nasdaq Composite closed 55 points lower. Regional banks came under pressure, with shares of PacWest Bancorp falling over 50% in after-hours trading, following reports that the California-based bank was assessing strategic options, including a possible sale. Okay, that's the global market action. A lot of cues overnight, but we do have some domestic cues as well. Our research team is joining it to tell you just that. What's the trade setup looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, let me come across to you. First up, looks like it could be another day in the red for our own markets.
Well, absolutely. It's the kind of handover that we've actually received along expected lines. The Fed rate hike came in. The U.S. indices ended lower for the third straight session, and the regional bank sell-off continued. So, most of anticipated, overnight cues have actually fructified as expected. Now, European markets too ended with marginal gain, but this was before, the Fed meeting outcome came into the picture. Now, when you're talking about crude oil prices, it continues to see a very significant and sharp decline. And for the second straight session, crude oil prices have ended over 4% lower. So Brent futures now down 4% in yesterday's trading session at the $72 a barrel mark. WTI futures too are coming in 4% lower at the $67.9 a barrel mark. Now, when you're talking about our own Indian markets, have been significant outperformers. Yesterday, Indian markets, snapped a 6-day losing streak, a 6-day gaining streak rather, and the broader markets managed to outperform the benchmark indices. Today's trend will be very important to watch out for. What actually outperformed yesterday? The FMCG, pack outperformed yesterday. Tire stocks to outperform. It'll be interesting to see whether that trend continues. Key results today, where there will be result reactions, would be Titan, and also some important results like HDFC, Hero Motor, Tata Power would be declaring their results today. And more importantly, Asia as well as SGX Nifty is indicating a subdued start to our own markets.
Okay, all right. So that's the market setup, expecting a weaker start for Indian markets, but a lot of stocks that will be in focus as well. Surbi has that list for us. Surbi.
Hi, good morning. Let's start with the earnings first. The first one is Titan, where the revenue was above the CNBC-TV18 poll, came in at 9,700 odd crores, but there was a slight miss on the EBITDA and the margin fronts. The margin has come in at 11% versus a poll of 11.6%. ABB India reported a good set of numbers. The revenue was up 23%, the EBITDA was up 52%, and margins have come in at 12% versus 9.5%. Tata Chemicals, again a decent set. The revenue was up 27%, EBITDA was up 47%, and the margins have come in at 22%. Cholamandalam Investment, the numbers beats the poll. It was a very robust quarter. The net interest income is up 31% and the PAT is up nearly 24%. Sona BLW, again a very strong set of numbers, a revenue up 36%, the EBITDA is up 50% and the margins have come in at 27%. Apart from that, Reliance will also be in focus as the resolution has been passed for the demerger of the financial services business by the shareholders, unsecured and the secured creditors. And lastly, Hero Moto, the company is going to expand its EV brand Vida to 100 cities by the end of the ongoing calendar year, and the company has also announced that it has reduced the price of its EV offering. The company is also going to report its earnings today. Apart from that, Dabur, HDFC and Tata Power will also be in focus as they are going to report its numbers today.
Okay, all right. Thank you, Surbhi, for that list. A lot of stocks that will be on our radar. But let's talk about the F&O space. Nigel is joining in with all those cues. Hey, Nigel.
Well, morning, Sonal. You know, the FIs, they're back to their shorting base. Yesterday, they added shorts to the tune of close to around 8,000 contracts, and they unwound some long contracts. So that's why we have the FIs back to net short positioning on the index. It's moved up to around 54%. On the option side, well, they bought more puts than calls. In fact, they bought 2 puts for every 1 call that they bought. On the writing side, though, that's giving you some hope from a bullish perspective because they wrote 65,000 put contracts. And it seems that there was some writing on the Nifty Bank put as well. In yesterday's trade, you had the 43,200 put, added close to 15 lakh shares, premium at around 100 rupees. So there was some writing being seen out there. At one point of time, the premium was close to around 200 rupees. On the Nifty Bank, you'll want it to hold that 43,000 odd mark. On the Nifty, well, the 18,000 put, there was a mix of activity out there, but it appears there was some writing as well. The premium came down to around 20 rupees. Call writing has come back, and that's why at higher levels you're expecting supply to come in there. So the recent high, that's around 18,180, that becomes a bit of a resistance, and the zone would be 18,150 to around 18,180 on the upside. That'll be the resistance zone. On the downside, though, going by the options data, the 17,950 to around 17,975 level, that'll be a bit of a support zone. Remember, we have weekly expiry that plays out today, so volatility should pick up, but that's the broad zone. The positioning is such that we hold on to that level. SGX Nifty suggesting a bit of a downtick to kickstart trade. I think at some point of time, risk reward could favor a buy closer to around that 18,000 odd mark. So let's see how this one goes. Back to you.
Okay, all right. Nigel, Surbhi and Vivek, thank you so much for joining us and telling us what to expect from our trading session today. Time for a break now. When we return, we'll talk about earnings. Titan reported an inline set of fourth quarter numbers. We'll get you all the analysis on the other side. Stay tuned. Welcome back. Still tuned into Power Breakfast. It's time to talk about some important quarter four numbers that we are tracking. Titan is on our radar. Posted a largely inline set of numbers post-market hours yesterday. Manglam is here with the analysis. Manglam, what's your take?
Well, you know, Titan reported a largely inline set of numbers, largely because, again, the street was prepared by the cheat sheet that the company had given. But the few, internal details suggest some soft spots in this time, for Titan, so which is why maybe we may see some decline in the stock price today. As far as the revenues are concerned, reported revenues, they are above what the street anticipated, and this is because the company sold about 1,055 crores worth gold ingots, which they do at the end of every quarter as well. The margins in the eyewear business were a bit of a miss, and that's largely because the company paid an 8 crore one-time, recognition to eyewear franchisors, and also liquidated some old stock. Here, the street was working with mid-teen sort of margins, and the company reported just under 2% itself. So to run you through the numbers, 9,700 crores on the top line. The street was working with 9,100 crores. I explained the outperformance there. The EBITDA, 1,044 crores versus expectations of 1,056 crores. And the net profit as a result of which coming in at 734 crores versus 737 crores. The jewelry business, if you account or adjust for the sale of gold ingots, coming in at 13.2%, and that's largely because studded mix has grown from 32% to 33%, so there has been an improvement out there. The eyewear business reported an EBIT of just about 2 odd crores, so we need to see where the management guides for performance, sustainable margins in this business. I heard into the conference call and the management said that, going forward, high-ticket items actually saw a much faster growth in jewelry. That's a positive. Also, studded mix, while it's improved to 33%, it's way off the pre-COVID levels of near 40%, so that's something we need to track. And at the same time, they've given us a guidance on jewelry and watches margins, which would be around 12 to 13% going forward. Eyewear business, however, suffered due to writing back of some stock, So improvement is something we will be watching out for. As far as the stock is concerned, it's trading at hefty valuations. It always has. So maybe for now, the street will believe that it's priced to perfection.
Okay, all right. Thank you so much, Mangalam, for joining in with that analysis. In fact, we'll be joined by Ashok Sonthalia, who's the Chief Financial Officer of Titan at 9:30 a.m. to discuss the company's fourth quarter earnings. So do stay tuned to CNBC-TV18 for that conversation. Moving on now to another stock-specific news. Shareholders and creditors of Reliance Industries, they have passed a resolution to demerge its financial services arm, Reliance Strategic Ventures. The majority of voters backed the resolution. Note that the demerged unit will be named Jio Financial Services, and shareholders of Reliance Industries will receive 1 share of Jio Financial Services for every 1 share held in the parent. Veteran banker KV Kamath will be the non-executive chairman of this entity, and shares of Jio Financial Services will be listed on NSE and BSE following the completion of its demerger. Of course, the standard disclaimer that will come up for you on the screen, and that is something that you should take note of as well as far as Reliance Industries is concerned. With that, let's move on to the aviation sector that has been buzzing off late. The National Company Law Tribunal will hear the insolvency plea of troubled airline Go First today. Note that the airline has proposed Abhilash Lal as the interim resolution professional in its voluntary bankruptcy plea. The loss-making carrier has also taken professional services firm Alvarez & Marcel as advisor for the ongoing proceedings. These decisions, however, are yet to get their nod from the NCLT, that is, from the airlines lenders as well. Okay, that is the update on Go Air. We'll keep getting you more updates as and when they come. For now, we'll take a short break, and up next, we'll get you all the cues from the commodities market. Stay tuned. Welcome back. You're watching Power Breakfast on CNBC-TV18. We spoke about equity markets. We spoke about business in general. It's time to talk commodities because a lot is happening in that space. Manisha Gupta is joining us as always to get us up to speed. Manisha, big moves in crude.
Oh, well, absolutely. 4% of a decline in the overnight market. And with this, we are down 11% for this week itself. So it's a 16-month lows coming in for the crude oil prices. Well, the U.S. Fed rate hike has been by 25 basis points, a 10th straight rate hike, and the markets were anticipating this. But it is about the fears of wider contagion, the weak economic data, the increase in inventories, and increase in supplies, not just from Russia, but from Iran as well. And the markets are not done yet because you have the European Central Bank meeting coming in today. And there is also an expectation of a rate hike from there, and that's weighing onto the space. The gold prices, in the meanwhile, clearly outperforming. We've seen an all-time highs for the spot gold prices to the tune of $2,080 per ounce. It has seen some profit-taking since then. It was a knee-jerk reaction yesterday, but the markets are anticipating an all-time high. The Indian markets, as they open, especially for gold, silver as well, is trading at a one-year high.
Okay, so precious metals doing well. Gold is at an all-time high. Thank you, Manisha, for joining us and telling us what's really happening with crude prices and some other commodities as well. But let's stay with that and also listen to what Amrita Sen of Energy Aspects had to say on where crude prices are headed from here.
This is the first time in decades, over the past 2 decades, actually, only 2 times has the U.S. actually drawn stocks in April. So the market is tightening very slowly behind the scenes, and this is even before OPEC has cut. Physical differentials around the world are strong and holding. So that gives us a lot of confidence, and we do think second half of the year prices will go back above $100 as long as, again, the economy holds. We've already factored in a mild recession in our numbers. We already do see OECD demand declining, so that's all been priced in, mostly, I would say, and definitely factored into the balances. The problem is the oil market's pricing in a very deep recession. Of course, the equity markets aren't pricing that in at all. The equity markets are pricing in a soft landing. Both could be wrong.
Okay, that's all the update as from the commodity markets. Quickly taking a look at the Asian markets because there is some recovery from the lows. Hang Seng, as we speak, is in fact higher than what we saw at the start of the show. Taiwanese index too in the green. So there has been a major recovery. The SGX Nifty, which was indicating a fall of around 80 points, is now indicating a fall of 60 points. A mild recovery there as well. Let's see whether that is something that will happen with our own markets as well, considering it's also the weekly options expiry. With that, it's curtains down on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.